Welcome to the Transparent FX Academy. My name is Nick and I'm a top author on TradingView with over 260k reputation points. And every day on this channel, I share a lot of free education and analysis. So make sure that you subscribe and I will see you on the charts for today's analysis. In today's video, I want to speak about US oil. The market has just created a new move. So as usual, I will be providing a complete multi-time frame top-down analysis first. We will be covering the technical aspect of this market. Then we will go and see what we have from an order flow perspective. So commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing. And by the end of the video, by using the combination of these different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly time frame, what we can see is that the market here has just created a very strong impulse to the upside, followed by this correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market here has just created a correction exactly to the zone, which is in between the 50% and 0.618 of the Fibonacci taken on this monthly impulse, which is a quite strong support and demand area that we did expect the market to test and then to start to reject to the upside. So here in the monthly, everything seems quite bullish. And we can expect more continuation to the upside. One thing that we must notice, however, is that we did get a break above the previous high. And in general, when you have a level of previous resistance and the market actually manages to break above it, at that point, you do expect the market to go for a retest of the previous resistance turn support before then getting the continuation to the upside, meaning that we can expect a short-term correction to this area before then getting the continuation to the upside. If we drop down on the weekly time frame, what do we have? Now here on the weekly, we can see how the market has just created this overextended W formation. Now in general, after the creation of an overextended W, you want to see the market provide a correction at least to the 0.32 of the Fibonacci taken on the weekly impulse before then printing the continuation to the upside. So here in the weekly, what we expect is for the market to provide a correction at least to this 0.32 of the Fibonacci taken on this weekly impulse, and then potentially getting the continuation to the upside. So once again, we do expect short-term bearish price action and then longer-term continuation to the upside. Just a quick thing, make sure that you like, subscribe, and let me know in the comments below any suggestion for new videos. Dropping down the daily time frame, what we can see is that the market has just completed this impulse correction and impulse pattern to the upside. Now, I spoke about US oil quite a few times in the past. I spoke about it after this impulse when the market was around this area. I explained all the reasons for which we could definitely expect this market to provide a correction and then the continuation to the upside, and that is what the market did. From here, I made another breakdown explaining all the reasons for which we wanted to see a retest of this previous resistance turn support and the continuation to the upside, and that is exactly what the market did. And then from here, I made another breakdown explaining why we first wanted to see a retest of this previous resistance turn support and then the continuation to the upside. And once again, that is exactly what the market did. And by the way, I will link all this previous analysis in the description so you can go and check them out for more free education. Now, when we have a market like this, that from a monthly and weekly perspective is indicating a potential short-term correction before then a longer-term continuation to the upside, we have to look at the structure that the market currently has here on the daily. And on the daily time frame, we can see how at the moment we still have bullish structure since the market is currently above this previous daily resistance, which is turned support here. Now, if we go and see what we have from a COT perspective, so what hedge funds and the non-commercials in the market are doing, we can see how lately net positions have been dropping with 3.3k short positions added with last report and 3.2k longs getting closed, reaching 45k shorts and 11k longs, and 18k longs. Now, in a situation like this, what we can expect is the market to potentially break the daily structure to the downside, provide the correction that we want to see when it comes to the monthly and weekly time frames, and then print the continuation to the upside. This is definitely a possibility. So the way in which we will be approaching US oil with students is as usual being reactive and not predictive. Until the market will remain above this previous resistance turn support, we can easily expect more continuation to the upside. So we will not be looking for any kind of shorting opportunities. However, if the market will successfully manage to break below this support, after the break, this previous support will be turned resistance. So if we will successfully break on the retest of this previous support turn resistance inside of here, with students, what we will be doing is monitoring price action from an intraday perspective, because the monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. So after a successful break on the retest inside of here, we will be monitoring price action with students from an intraday perspective, waiting for the market to provide to us one of our valid entries. And if we will see one of our valid entries at that point, we will be looking for a potential short with a good risk to reward and good probabilities for the market to provide the move to the downside and complete this impulse correction and impulse pattern to the downside. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. You first get all the rules of my rule-based strategies, then you get a new daily market breakdown every single day showing you how to apply these strategies in real-time market, and you also get all your questions answered every single day in the daily Q&A session. So it's a very complete program. I suggest that you go and check it out. The link is in the description, and I will see you in it.